Today on the podcast, I sat down with Zach Townsend, the founder of Meanwhile. Meanwhile is building a Bitcoin-denominated life insurance company. In this conversation, we discussed the mechanics of the product and how Zach sees the broader Bitcoin capital markets sector evolving in the next few years. I think you'll enjoy this one, so without further ado, here's my conversation with Zach Townsend.
Matt Walsh and Nick Carter are partners at Castle Island Ventures. All views expressed by them or the guests on this podcast are solely their opinions and do not reflect the opinions of Castle Island Ventures. Guests and hosts may maintain positions in the assets discussed in this podcast. You should not treat any opinion expressed by anyone on this podcast as a specific inducement to make a particular investment or follow a particular strategy, but only as an expression of their personal opinion. This podcast is for informational purposes only.
Brought down by bad mortgage investments, Lehman, which has 25,000 employees, will be liquidated.
The federal government loans American International Group, AIG, $85 billion.
This is a different kind of market, and the Fed is asleep.
The federal government is stepping in to stabilize Fannie Mae and Freddie Mac, the two mortgage giants that have been threatened by the housing crisis.
The Bank of England has pumped £75 billion more into Britain's ailing economy with a new round of quantitative easing.
You print a couple $1 trillion, and all of a sudden, people start to worry. So out of this worry, we have something called the Bitcoin.
Zach, thanks for coming on the podcast today. Excited to talk about Bitcoin life insurance. We have never talked about that on this podcast before.
We're the only ones. Thanks for having me, Matt.
Would love to just start with your background and what led you to this idea, which is quite a novel one.
Like anything in life, it's somewhat complicated. On the one hand, I have a background in fintech. So I moved out to San Francisco, worked at Stripe for a bit, went through Y Combinator with a company called Treasury, backed by Index Ventures, Andreessen Horowitz, Data Collective, and others. And we built banking infrastructure, banking APIs. I got very interested in the business of banking. We thought about starting a bank. So I was thinking a lot about what do you do on the loan side of a bank and how does that all sort of fit together. At the same time, this is like 2013, 14, 15, I got interested in Bitcoin. And that business ultimately gets bought by Silicon Valley Bank. So on the one hand, I didn't have this traditional fintech background, thinking a lot about banking. And I began thinking about life insurance as the best bank to run, because the problem with the bank is you make promises that people can have their money back whenever you want, and then you go make mortgages. It's like It's a Wonderful Life. And it sort of doesn't work. There's a fundamental mismatch. But in insurance companies, you don't have that mismatch because you say like, hey, Matt, I'm going to make a promise to you that when you die sometime, say in 40 years from now, I'll give you your money back. So you give me money now and I'll give you money for the future. And that makes sense for both of us. But then I can go invest in a mortgage because there's matching between the durations of those liabilities, the insurance products and the assets. So thinking about all this stuff for years, I go and lead a big chunk of product at another fintech unicorn, and I lead a part of the fintech practice at McKinsey. On this other strain, I'm just sort of like buying and accumulating Bitcoin. I don't pay a lot of attention to the ICO boom. And at the beginning of my co-founder and I sitting down to start this company, we just have this core belief, which is Bitcoin land, crypto land is an economy. You should think of it like a country, and there's like an economic system being built. It's a little weird in that it's global and it's decentralized and it's like a layer above the global economic system maybe, but it makes sense sort of as a country and an economy. So we sat down and we made a list. What are the regulated financial institutions? Because we're really good at regulatory bullshit. What are the regulated financial institutions that exist in every economy? Oh, there's exchanges, there's payments companies, and there's banks, there's asset managers. And actually, we didn't have life insurance on the list. A week later, I literally woke up in the middle of the night, 2 a.m. I was like, oh, this should be a Bitcoin life insurance company. I can like merge all these things I care about together. And then I went to my office at 2 a.m. and I wrote the memo. And that is the memo we raised our seed round on. And then we were off to the races.
That's an incredible story. I think a lot of people probably interact with life insurance maybe from like a term life policy. So they just make a payment and it's probably on auto debit from their account and they don't think too much about it. There's a whole nother type of life insurance, whole life policies, which I'm not actually sure if those are more popular or less popular than term, but maybe just talk a little bit about how insurance works today and then how you guys are approaching it with Bitcoin being the core asset as opposed to dollars.
Let's just start with what is term and what is whole? What is life insurance? The history of life insurance is we're all going to die, but we don't know when. It really sucks if you die before you're supposed to. So what do you do? The idea is like, okay, well, if 1,000 of us get together, we don't know who's going to die, but we can start to see statistical regularities. Oh, well, maybe like 3 of us are going to die. So if 1,000 of us all put $1 in a pot and we say whoever dies gets $300 and there's $100 in profit for whoever like runs this thing, that sort of makes sense. There's like risk sharing. So that's the history of the insurance business. And then what happens is insurance seems good. Orphans and widows don't starve. People buy life insurance. What happens is that governments really all over the world, if they have taxes, they tend to have tax benefits and tax privileges for life insurance products. The reason that story is important is there's a few things happening in life insurance. One is there's the literal protection for you or your family. There's savings aspect of it that I'll talk about. But then there's also what gets layered on is we should all save for retirement, but we save more because there's 401ks. In some ways, we should all have some life insurance, but maybe we'll have more of it, or we'll do different things because these tax benefits exist. So term life exists for a term, 10 years, 20 years, 30 years, and you're very unlikely if you're young to die in that term. So you pay a very little amount of money for a huge amount of coverage, and it really is catastrophic loss. That example I gave, you're putting $1 in a pot and you get $300 out. But the ratio is even better. I think I pay $1,000 a year for like $3 million in coverage. So that's a 3,000 to 1 ratio. I'm just not going to die in that term. I could, but no, it's not. So term life, I bought term life when my wife and I got a mortgage. They were like, okay, we should both have 30-year term life for a 30-year mortgage. If one of us gets to buy a bus, the other can pay off the mortgage. So that really makes sense. Now, there's the whole other side of products called whole life. And the point of whole life or permanent life insurance is it lasts your whole life. Since we're all going to die, there will eventually be a payout. For our Bitcoin product, we started with whole life, partially because if you're going to model Bitcoin, it just makes sense. You're saving it for your kids anyway, so why not put it in this tax advantage structure, which I can tell you about. The other reason we started with whole life, not just because we primarily consider it a product, but also the thing about term life is most of the people who buy it don't get anything. I mean, they did get something, which is they got the protection, but they might not feel like they got something. Most people, you come to the end of the term, you don't get a payout. And there's just not a great history in crypto and Bitcoin on products where people put money in and they don't get any money out. So we just didn't think that that product made sense, even though it is a great product and you should buy it for the protection. That didn't feel like a great product for us to sell until everyone already knows our name and they really trust us. We started with this product called Whole Life, Bitcoin Whole Life. And basically, it's pretty straightforward. You pay us Bitcoin every year for 10 years. We make a fixed guaranteed payout. This might look like Matt pays us 1 Bitcoin a year for 10 years. So you paid us 10 Bitcoin. And we promise whatever Matt dies, your wife or kids or nieces or nephews or whatever will get 15 Bitcoin. So we're like turning the 10 into 15. We can talk about how we do that. And then you just get these benefits. It goes to your beneficiaries, income tax-free. That compounding from 10 to 15 is tax-free. You get the protection that I mentioned, like you get by a bus tomorrow, you get the 15. And the big cool one, I think that people just love the interaction with Bitcoin is you can borrow against the policy tax-free. If you think that Bitcoin is going to go from $100,000 to $1 million, then you could borrow Bitcoin out in year 15. You're not paying any of the capital gains tax. And then again, you eventually die and it goes to your kids tax-free. You don't really pay the loans back. It's like netted out against what we pay your kids. So you borrow 1 Bitcoin out. So instead of your kids getting 15, they're going to get 13.8 or whatever, 1 plus interest.
That's fascinating. So it seems like it's a good option for someone that, would you say, thinks Bitcoin will go up in the future and probably has enough Bitcoin to meet those yearly payments.
Yes, people buy it who think Bitcoin will be worth more in the future than it is. So you think Bitcoin's going to zero, not the right product for you.
Has anyone tried this on any other asset besides dollars over the years? Is there a history of people trying this with things like gold or any other esoteric asset?
Well, the problem with gold is it's hard to turn gold into more gold. There are all these rules in the Internal Revenue Code for the United States about what is and isn't life insurance, and there's like a minimum rate of return. Basically, in the 60s and 70s, people did really crazy stuff with life insurance. They put their yachts in life insurance. It was like this catch-all generic way to avoid taxes and estate tax. Back in the days when Congress could pass sensible laws and debate things as part of the like Reagan tax reforms, they passed rules about what is and isn't life insurance. Now, what's interesting about those rules is they don't use the word dollars or the word cash. They do use the word value. So when we went to like our big expensive law firm, I was like, hey, is this going to be life insurance in the Internal Revenue Code? They were sort of like, oh, we've never thought about this, but the answer is yes. You could denominate a life insurance contract in bushels of wheat. And there is some insurance company in like Zimbabwe that does insurance policies in cows, which I find like really fascinating. The other thing you mentioned though is, do I recommend people do this about the Bitcoin? We do not recommend you go short Bitcoin. If you're going to buy a 10 Bitcoin policy, I'd suggest you do that if you have like 20 Bitcoin or 30 Bitcoin or something. If you're going to buy one Bitcoin policy, maybe you should have 2 Bitcoin. We have people who buy 35 Bitcoin policies. We have a max. Some people do this and they're like, this is a way to dollar cost average into Bitcoin. And I'm like, I don't recommend people go short Bitcoin. When you put a Bitcoin in our policy, it's a long-term thing. Even the borrowing is valuable in the out years. So think 10, 15, 20 years. I usually say to folks, you have some amount of Bitcoin, our minimum policy size is 1. If you're fortunate to have a couple Bitcoin or a lot of Bitcoin, you should think about a portfolio theory around that. Maybe you are self-custodying some in a ledger buried in your backyard or in a savings deposit box, whatever. Maybe you have some in a multi-sig like a Casa and Unchained. We're part of that solution. We're in that world. And then you get these tax benefits I mentioned. You're like growing your Bitcoin. You have to borrow against it. We're not trying to pitch people on like, give us your entire stack. We're trying to say, are you planning to hodl for your kids? This is part of the solution to that.
That makes total sense. So in the example you gave, a 10 Bitcoin policy turning into 15, is that 15 locked? Is that a contractual thing where you say it will be 15 at the end?
When you sign the contract, we like give you that fixed guaranteed payout. It's anywhere from 12 to 18. And it depends on your age and whether you smoke or not, and whether you're a man or a woman, whether you are on death's door and going to die of cancer tomorrow. We are a life insurance company. But if you're young and healthy, come talk to us.
10 to 15. Yeah, you want the healthy Bitcoiners for sure.
There's a lot of overlap between Bitcoiners and an obsession with longevity. I sort of joke that we sell life insurance to 30 to 50-year-old rich men who are obsessed with longevity. It's a pretty good population to sell life insurance to.
A lot of people that avoid seed oils and try to eat carnivorous diets, stuff like that.
Now, oddly, we ask these questions about drug use. We probably get a more diverse set of answers to that question than the average life insurance company. So we've had to really engage with what's the mortality implications of Molly and shrooms in a way that I'm not sure New York Life is.
Makes sense based on some of the use cases that took off first.
Yeah, I do enjoy people who pretend that they're geniuses. And I'm like, did you just really want to buy pot in 2012? Is that why you have 2,000 Bitcoin?
When you get the pitch that someone got into Bitcoin in 2011 or something like that, what exactly were you doing back in 2011? Let's talk a little bit about how you transform that 10 Bitcoin into 15. So maybe you could talk about how you guys function in the capital markets for crypto, where the yield comes from to get from 10 to 15.
There's obviously not a good history of getting yield in Bitcoin. And there was BlockFi and Genesis. We are aiming and successfully get pretty low yields. So we promise people implicitly something like 2% returns, and we are seeking 3% returns. That 1% is how we make money as an insurance company. BlockFi was out there saying, oh, we'll get you like 7, 9, 12% returns in Bitcoin. There are no 7, 9, 12% returns in Bitcoin that I'm comfortable with. You can be comfortable with it, but you should know that those are really high rates. We have a half independent board. We're regulated. We are a life insurance company. We have a chief risk officer, a chief compliance officer, a credit committee, an investment committee, a huge enterprise risk management framework. We have to post our own capital. That's part of it. Is we've put 200 Bitcoin into our insurance company. First loss capital on any loans before policyholders would ever lose any capital. Fundamentally, what we do is, to go back to what I was talking about in the beginning, people are entrusting us with their Bitcoin for a long time. And that allows us to go into the debt capital markets and say, hey, we will lend you, mostly institutional counterparty, Bitcoin at term, which means we'll do it for like a year. But what we want is credit protection. There's a relatively robust overnight Bitcoin lending market, but it's unsecured, uncollateralized, yields like 4% right now. And I'm actually not much in this market, but that's my understanding. Well, we say, hey, big institution that the listeners in the room of, we'll lend you 50 Bitcoin or 100 Bitcoin. We'll do it for 2 years. We want 3% yields. But no, we're not going to lend against your bullshit Cayman subsidiary with no equity. We want a parental guarantee. We want a 100-page legal agreement. We want covenants. We want seniority. We're running a credit operation. And that has succeeded in that we have gotten 3% yields and we have never had any credit losses. We are incredibly conservative. That's how we get yield. It's not like playing the casino or doing cover calls or stuff like that. Big institutions that have a lot of equity borrow Bitcoin from us for term.
I would imagine that the growth in the ETF market and just the types of financial institutions that are trying to market make and BAPs for these products has probably expanded the list of firms that have the need to borrow Bitcoin. Is that a correct assumption, that the capital markets around the ETFs and some of these Bitcoin treasury vehicles even might have brought more participants into the underlying spot market for Bitcoin?
I think that's right. I don't want to say that these are like super developed market. We are negotiating each of these deals one-on-one, counterparty to counterparty. We're running a private credit desk in Bitcoin. It is not like there's a ton of 1-year Bitcoin nominated bonds out there. There are, in fact, none. We're working on trying to have more to develop that. But you're absolutely right that as there's more in various ARBs, there's this company RDC that's doing deposit receipts in Bitcoin. There's margin lending, there's prime lending, there's market making. We have a few loans that are really like treasury operations. You're an exchange and you just need to like get through the day of filling orders. And you have a bunch of Bitcoin in cold storage. How do you do that? Do you just buy Bitcoin? Now, maybe in the treasury play world, actually, you should just buy that Bitcoin. Coinbase, I think, has gotten a lot of flack for not having more Bitcoin, given how old they are. But another way to think about it is more like a treasury operation. Oh, well, if I can borrow Bitcoin from these guys and not put a bunch of my cash to work and just pay them 3%, that makes more sense for me. So there's also like payments firms and stuff like that. We've done one loan to a miner, but haven't found sort of like another one. In theory, that's another category of folks who you could lend them Bitcoin. They could like go buy rigs and electricity, and they like have cash flows in Bitcoin.
It'll be interesting to see how this unfolds. I mean, I've been reading a lot of the SEC crypto working group meeting minutes where they're meeting with these ETF issuers and banks around the in-kind create process for the Bitcoin ETFs. And at that point, you're going to have a lot more of these financial institutions that are creating the ETFs actually touching Bitcoin. And I would think that there would be a bigger demand to just borrow in order to facilitate some of these things. So I'll be interested to see when the banks actually have the ability. I guess they do now have the ability to touch spot with SAB 121 going away, but the in-kind create hasn't been approved yet. I wonder if more banks will be in this market in the next year or two.
Every insurance company has two things. On the one hand, we provide what we believe is a critical financial service to our users and helping them save for the long term, protect their family, do the types of tax and estate planning that we were talking about. And on the other hand, every insurance company is also an asset manager. There's also a permanent capital vehicle. And like that's why you may or may not know this. Apollo owns Athene, which is a big insurer, and KKR owns Global Atlantic, and Blue Owl just bought Kuvar. So what I think is unique is we believe that Bitcoin is money and the best global store of value there is. If Bitcoin is going to be money, it's going to mean there are capital markets denominated in Bitcoin. And it's going to mean there are debt capital markets denominated in Bitcoin. We say we want there to be a yield curve in Bitcoin. And that somewhat sounds nonsensical to people. Oh, why would there be a 5-year borrow lend rate on Bitcoin? And I'm like, well, if it's money, there will be a lending market. We see ourselves both as our super long-term existence depends on there being debt capital markets or some way to get yields on Bitcoin. But also we see ourselves as part of creating that market.
Maybe just a bigger picture stepping back question. What's your view just generally on the state of Bitcoin today? And very curious your view on these MicroStrategy like companies that are popping up and running these treasury strategies in the public markets.
I'm obviously a big believer in Bitcoin, and I'm a big believer in the idea that this is a better form of money. And I think you're going to see a lot of companies own some Bitcoin. And it's going to be a reasonable and long-term part of everyone's treasury strategy. I don't think that means that the particular MNAV arb that exists now can persist forever, and that there should be 100 of these. Having said that, you look around the world and much of the physical infrastructure of the world, many of the mortgages, a lot of the long-term corporate debt, a lot of venture funds, they're owned by permanent capital vehicles. They're owned by insurance companies, life insurance companies in particular. They're owned by endowments. They're owned by sovereign wealth funds. I think people are focused on the ARB. They're focused on the converts. They're focused on getting access. How I see these institutions is they're endowments. They're Bitcoin endowments. And in 10 years, that's what they're going to be. They're going to be these big public pots of Bitcoin. And what are you going to do with that? Well, I think you're going to manage it like an endowment. You're going to be thinking about, how do I put this Bitcoin to work? How do I get yield? How do I create productive economic activity in the world so you add value to my stakeholders? I'm always trying to understand what's the long-term story. Because we're running an institution that's supposed to last decades. We're making promises to our policyholders that are going to last for 60, 70, 80 more years. So that's how I see these treasury companies. Nakamoto will be the Yale endowment. The problem with strategy is, in my opinion, they may be too big.
Too big to actually run that endowment model, you think? Or
Yeah, but also if 10% of the world's supply of money was owned by one institution, then that institution, it's not just that they're powerful, it's that a planet with too much gravity for any moons. That's my worry. If Bitcoin is going to be money, it needs to move. It needs to go from one place to another. It needs to be the cornerstone of economic activity. It's not just gold in the ground. It's currency. And that is what the white paper is about. It is about cash transfers. I worry that if MicroStrategy ends up controlling 2 million Bitcoin or something, then I don't know.
is Bitcoin used for payments at that point? Not that it really is now. That is sort of like a stablecoin use case in a lot of ways. We've tried Lightning.
I actually would say payment of what type? I'm not sure it's about peer-to-peer payments, but I think it could be about country-to-country payments. I see this future where there's such an intrinsic connection between energy and natural resources in Bitcoin. You could imagine oil futures contracts being settled in Bitcoin. In that scenario, Bitcoin is more like wires than it is like credit cards.
It's more like the Fedwire system, probably, in a lot of ways. The ultimate custodians probably don't even have to do that much movement.
3 years ago, I was in Midtown Manhattan with one of my investors who's like a TradFi guy, heavy insurance guy. Doesn't really think a lot about Bitcoin. It's you know how I think about Bitcoin? I think of it like fine art. And then he waved out the window. Or like these buildings. I'm like, what? What are you talking about? And he's like, it's just a way for rich people to trade big chunks of value.
It's an interesting lens. It's definitely one use case. I guess there's the other use case around living outside of the United States and wanting to preserve your wealth in something other than your native fiat currency.
When I pitched, Sam Altman led my seat around how that happened. I'm like, I want to serve 1 billion people. He's like, how are you going to do that? I'm like, if you are a middle-class person in Argentina, you do not buy life insurance because you are going to live longer than the Argentinian peso. So I fundamentally believe if you are in Cambodia or Turkey or Nigeria or Argentina, you should be buying life insurance in Bitcoin. But it's also the case that if you bought life insurance, as I did in 2018, which is when my son was born, so 7 years ago, then you have seen the purchasing power of that policy go down only at 30%. What legacy are you really actually passing on to your loved ones?
Totally. When you're going out there and you're selling this product, there's a lot of questions. You have to convince people to believe in it from a number of different angles. Convincing people Bitcoin is going to be a thing is probably less of an issue for you. You're dealing with people that have Bitcoin to begin with.
We don't attempt to convince people on Bitcoin. We don't see ourselves in the business of convincing people on Bitcoin. We are in the business of convincing people who've already decided to buy Bitcoin that they should buy our product. And I'd say the fundamental tension there is in every Bitcoiner's heart, there's a love of self-custody, but there's also a hatred of taxes. And then we're just like trying to find where you are in that spectrum. I guess that's one persona of our customers. And then we have another set of customers who are family offices, are people who are maybe not so ideologically aligned. And they're just like, I bought 10 Bitcoin because I don't want to be the idiot that doesn't want 10 Bitcoin, or I believe in the aspect, whatever. But it's like a part of their wealth. And then they're always looking for the clever tax structure for their wealth. And we are one of the few ways to hold a significant amount of Bitcoin in a known process.
I'm sure you get asked a lot about competition, but it strikes me that life insurance companies don't move really fast. Do you think there's a long time before we're going to start to see large US insurers move into this market and write policies similar to the ones you're writing?
Let me answer the narrowly constructed question you have, which is, am I worried about competitors? I'm absolutely not worried about competitors. I think that, yes, all the TradFi insurance people are not going to really spend the time to understand how to do this, and it scares them. And then I'm not really that worried about other crypto founders. Weird folks. We're just really into reading regulations and writing 1,000-page business plans, as well as love Bitcoin and go to nap. It's a pretty unique skill set. That being said, we can help other carriers bring this product to market. If you're big carrier X in the US or in Argentina or in Singapore, there's structural challenges to you doing this product or any insurance product that has Bitcoin. These people aren't dumb. They're economic. They're out there seeing that BlackRock and Fidelity and Franklin Templeton are saying you should put 1% of your retirement savings in Bitcoin. Well, you should put 1% of your annuities or 1% of your life insurance in Bitcoin too, but they can't structurally do it. We announced our Series A in March. We raised $40 million. So we've raised $61 million to date. And I have been surprised at how much it turns out we may really be in the institutional reinsurance business of helping others bring Bitcoin products to market, in addition to selling it directly to the folks who listen to this podcast.
Just the debt capital market side of this alone would be a monstrous undertaking for a large insurance carrier to just start from scratch, I'd imagine.
Absolutely.
This is fascinating. Where can we send people to learn more about Meanwhile, about these policies, and get in touch?
It's meanwhile.bm, although meanwhile.com redirects to us. If you begin the application flow, you insert your email address and your password, and you start answering questions, someone from my team, whether it's me or someone else, is going to send you an email, is going to offer to set up a one-on-one call, because people have so many questions. They want to really know they can trust us. They want to know about our enterprise risk management framework. They want to know how we do the lending. And they want to know, what's that section of the Internal Revenue Code that I can figure out? And you talk to my accountant. So we have a very personalized hand-holding process to push people through. And that process really begins with signing up on the website to a certain extent. And then you get a personalized reach out from one of us, and we set up a call.
That's awesome. Meanwhile.bm, we'll put it in the show notes as well. Well, thanks for taking the time to come on the podcast and talk about it. A truly novel idea here. So congrats on all the progress.
Amazing. Thanks so much for having me, Matt.
Thanks for listening to another episode of On the Brink with Castle Island. To find out more about Castle Island, visit castleisland.vc. To listen to all of our podcast episodes, please go to onthebrink-podcast.com or just click on the tab in our website. Thanks for listening.